Let's unpack those movements with Ridwaan Moolla, who's the CEO at Think Markets. A very good evening to you, Ridwaan, and thank you for joining us as always. Let's start with the performance of the JSE, continuing on yesterday's losses. Market participants really worried about the economic trajectory of China and, of course, just where central banks are going to be going when it comes to interest rates. What would you say were some of the other catalysts that have kept markets under pressure for a second day in a row?
Good evening, everyone. Yeah, so look, today we had the good news, as you just highlighted, with regards to a nice drop in inflation. But today our market was all about global markets. We've got massive issues coming around the world with regards to the UK, especially. Their inflation is actually increased. The US, we've got Chairman Powell right now, who is busy talking about the fact that he's going to be expecting to increase interest rates because inflation there is also not coming under control. So everything around the world, unfortunately, was bad news, and markets around the world were all down. That impacted the JSE as well. We had one shining star on the JSE. We had Afrimat, who yet again was up almost 6%. But that's obviously because of the Lafarge deal that's been going through. So those shareholders are very, very happy with it. But DRD, DRD, Anglo, all of these companies, Implats, all down. Well over DRD, and that was well over 5% at Implats. So big impact on our market. We also had some warnings coming out from FirstRand with a bit of a trading update. And that is all just adding. Higher inflation, higher interest rates is causing major downside on the market. Just to close, with regards to the JSE, we started this week at 78,000 points. We are now just above 75,000 points.
Yeah, no, it's absolutely quite a telling picture, Ridwaan. Another one, I don't know what you make of what the Rand has been doing in terms of its movements. We were really optimistic a few short days ago when it showed some solid strength against the US dollar. We're starting to see that slippage again. Has it got to do anything with the dollar, or are there some local components that are dragging the local currency once again?
So it's definitely both. The dollar has strengthened these last few days. It has had a bit of nice strengthening happening. But when you have companies like FirstRand coming out with a warning, there's potential recession. They warned about the impairments that they are facing, people not being able to pay, their credit, their debt, do repayments on it. So all of those things obviously are going to impact the Rand as well. But ultimately today, it was more about the dollar strengthening a bit more because people are now obviously going back into safe havens.
And I just want to talk more about FirstRand. Yesterday Standard Bank released a similar kind of update to the market, just the pressure on the consumer and the immediate impact that that's going to have on their interims. So the outlook, when you look at the trading statement that was shared by FirstRand, they do seem a little bit optimistic, saying that they are weathering the storm, but they're really not blind to the pressures of their retail customers. And these are the retail banking and the pressures for their customers to meet their debt obligations. So what would you say they will be looking like in the short to the medium term, given the current lay of the land when it comes to the operating environment?
If you look at FirstRand's trading statement, there were really some good positives that came out of it, in the sense of they have grown their client base. They have seen, however, obviously increasing costs and all of these things. But for them, the big thing was that don't expect the results to be what they were, last year and so forth. They're not going to be growing by 25% and so forth. So it was more of a thing to say, look, be aware that we're still in a good position. There is going to be growth, but it's not going to be the growth that you normally associate with, like FirstRand's group, especially. And impairments were obviously the big talk amongst all the banks with regards to results. Standard, like you said yesterday, a 50% increase there. FirstRand again warning that they're also going to have some very high credit impairments as well.
Yeah, and then of course the big story that has gripped us since 2017, Ridwaan, Steinhoff. So two big developments here. A court in Germany ruling in their favor when it comes to the restructuring model that it'll be taking on. Creditors wanted it, shareholders didn't want it, took Steinhoff to court, and Steinhoff has subsequently won that case. But also a warrant of arrest being issued for the former CEO. What do you make of these developments? I mean, many would say this is still a defunct company and there's not much of a future left for it, but there are developments happening nonetheless.
Pretty much, like you just said in the closing there, it's done for now. I mean, with the court ruling, 80% of the company is basically going to creditors. They got a 3-year holiday period, as they would call it, and I put it in inverted commas. So they've got a 3-year debt repayment holiday. But ultimately, shareholders and everyone else, you're done. Steinhoff is done for. There's nothing much left there. They obviously can't repay the billions that they are owing, and they're not. And obviously, the court is seeing that this is never going to happen. So it's looked at the best solution, which means creditors take it over, and that's it. Ultimately done for. The Marcus Wurster side of things, you know what? It's my personal opinion. It's just somebody just trying to drag it on and drag it on. Obviously, there's a lot of things he's got to own up to, but we'll see what happens there.
Yeah, no, absolutely. I suppose if you've got deep pockets, you can drag anything on, Ridwaan. Thank you very much for that market update. That is Ridwaan Moolla, who's the CEO at Think Markets, giving us an update on the markets. So we'll